You've been delivering pizzas, climbing endless flights of stairs in the rain, and dealing with customers who suddenly forget how to tip the moment they smell pepperoni. It's been 30 days of non-stop hustle. You're finally lying in bed, exhausted but excited because today is payday. You get that notification on your phone. You've been paid $4,000. You smile thinking about all the things you're going to do. You're rich. But then you open your banking app and reality hits you like a cold shower. Your balance doesn't say $4,000, it says $2,912. What happened? Did the app glitch? Did you get robbed on your way home? Well, technically yes, but you were robbed by the most professional legal thief in the world, the modern ritual. You scroll down your pay stub and see a list of invisible forces taking their cut before you even saw a penny. Federal income tax, state tax, Social Security, and Medicare. This is your mandatory subscription fee for living in a modern civilization. Why? To build the roads you drove on, to fund the schools in your neighborhood, and to make sure the food you eat won't poison you. It's annoying, and it hurts every single month. But there's a pattern here. Usually, the countries with the highest subscription fees are the ones where life is a bit smoother and the schools are a bit better. It's the price we pay to avoid living in a chaotic wasteland. But here's the kicker about taxes that feels like a bad prank. The government actually knows exactly how much you owe them. They have the receipts, they have the data. Yet once a year, they make you play a high-stakes guessing game. They make you calculate your own taxes. And if you guess the right number, cool, you get to keep living your life. But if you guess wrong, you're cooked. We're talking audits, heavy fines, and enough legal paperwork to make you want to go back to school. Some people pay their dues every few months. Some pay once a year. And then there are the ones who decide not to pay at all, and they usually end up becoming the main characters in a Netflix true crime documentary. Now, once that money finally clears and sits in your bank account, you feel happy to think it's safe. You imagine it tucked away in a giant ironclad vault, guarded by lasers and heavy security. But in reality, your money is already gone before you even leave the bank lobby. See, most people view banks as big glorified safes. But banks aren't safes. They are professional financial matchmakers. When you hand that teller your $1,000, they count, they give you a nice smile, and then immediately turn around and give $900 of it to someone else who wants to buy a car or start a business. This system is known as fractional reserve banking. It relies entirely on a pinky promise that we won't all show up at the bank at the exact same time asking for our cash. If everyone decided to withdraw their money today, the bank doors would lock. The screens would go dark. We saw this happen in 2008 when people lined up around the block and the house of cards fell over. Banks make their money by lending your cash at a high interest rate, while giving you practically very little in return. You are the supply, and the person buying the car is the demand. They entice you to keep your money there with the promise of convenience and safety. In the US, the government even insures you up to $250,000. So even if the bank loses your money on a bad loan, Uncle Sam technically has your back. Let's talk about the interest that drives the whole world, but doesn't make any noise. Interest is simply rent for money. If you borrow $1,000 today and have to pay back $1,280 later, that extra $280 is the rent you paid to live in, someone else's future. When you borrow, interest is the price tag for using cash you haven't earned yet. When you save or invest, interest is your reward for being patient. And honestly, a little bit boring. There are two main flavors here. Simple interest is just a flat fee. A quick thanks for playing. But compound interest, that's where the clones come in. Imagine every dollar you have right now has little clones, and those clones also want to collect rent. If you owe 20% interest on a credit card and you miss a payment, that interest starts earning its own interest. Pretty soon, that $12 lunch you bought on a Tuesday turns into a $50 nightmare of regret. But on the flip side, if you invest at a 7% compound rate, your money starts duplicating itself like a legal cheat code. You start with 100. It becomes 200. Then 401 day you wake up old rich, feeling a little bit too pleased with yourself. Interest is either your worst enemy or your hardest working unpaid employee. The choice depends entirely on who is collecting the check. Stay with me here, because this next part is the exact reason why most people stay broke, even when they work 60 hours a week. Have you ever bought a bag of chips, opened it up, and felt like someone had already eaten half of it? That's inflation. It is the slow, silent erosion of your power. Your $5 bill still says $5 on it, but it buys less gas, fewer groceries, and fewer snacks than it did last year. Inflation happens when money slowly loses its value over time. Sometimes it's because the government prints too much of it, and sometimes it's because 2,000 people are all trying to rent the same $1,000 apartments. So the rent jumps to $2,000 a month. A little bit of inflation, about 2% a year, is normal, even healthy. It keeps the gears of the economy turning. But when it spikes, your savings start to melt like an ice cream cone in the July sun. The government tries to fight this fire by raising interest rates. This makes it more expensive for people to get loans, which means they have less money to spend on things like TVs or cars. This cools down the economy, but it's a bitter medicine that everyone has to swallow. And if that medicine is too strong, we hit a recession. A recession is basically the economy's way of telling us the party is over. Imagine the tide pulling back. At first it's calm, then the water keeps receding further than it should. Boats. Tilt the shore is exposed. A recession is that moment when the flow of money quietly pulls away. A recession is when the economy shrinks for at least 6 months. Jobs vanish. Companies start cutting costs. Recessions aren't forever. They are painful resets that clear out the noise. Eventually, the spending returns. Businesses rebuild and growth resumes, but the scars usually remain. So how do the big players decide who gets to survive and who gets left behind? They use a shadowy 3-digit algorithm called the credit score. It's a number that knows your name, your past, and exactly how many times you were late on a payment. It decides if you get a house, a car, or a soul-crushing interest rate on a new TV. This number isn't a measurement of your wealth. It's a measurement of trust. Lenders want to know, if I give this person my money, will they actually pay me back? If your credit score is over 750, you're sparkling with credibility. If you're below 580, you're a walking red flag. Think of your credit score like a muscle. If you don't use it properly, it weakens. Train it consistently, and it gets stronger over time. On the other hand, have you ever noticed how the world seems to nudge you toward borrowing? It's almost like a lifestyle choice they're selling. Real financial peace isn't about how much you can spend. It's about how much you own of your own life. Think of debt not as a monster, but as a heavy backpack. The lighter that backpack is, the faster you can run toward the things you actually love. Whether that's a dream project, a sudden trip, or just the peace of mind that comes with knowing you don't owe anyone a slice of your tomorrow. When you focus on owning instead of owing, you're not just saving money, you're buying back your own freedom. Having a clear calendar and a debt-free bank account is a luxury that no designer store can ever sell you. It's about being the boss of your own time, and that's the ultimate win in this game. In fact, money isn't even real. It's a social construct, a shared belief. A dollar bill is only worth more than a stick, because we all collectively agreed it has value. We have to understand value. Steve Jobs didn't get rich by trading 24 hours of his day for a paycheck. He got rich by creating massive value. The iPhone, if you provide value, the world hands you money. But our most valuable asset isn't actually cash, it's time. Almost everyone starts with a lot of time, but no one gets an unlimited supply. Most people work jobs where their time is traded directly for money, 1 hour for 1 paycheck. The top earners make their time worth millions through leverage and skills. But nowhere does time work harder than investing. There is no greater force in wealth building than time. Wealth isn't built in days. It's built in decades. Money that sits quietly in an investment doesn't just grow, it multiplies. You can spend your life trading your time for money until you're too tired to move, or you can train your money to work for you. Start early. Stay patient and let the clock do the heavy lifting. The system is moving, whether you like it or not. You can be the fuel, or you can be the driver. The biggest players in the world, They hedge, they do not play one game. They position themselves for multiple outcomes. If you liked the video, do not forget to subscribe and hit the like button. More is coming.